Hey guys, and welcome to today's edition of the London Session Open. Today we're doing a recording instead of doing it live because we had some technical issues in the office today. Let's take a look at the markets, and we're going to talk a bit about the pound. As you probably already know, the pound declined quite sharply, and the reason for that is because the manufacturing figures for the UK were disappointing. So the numbers came in at 47.4, which was below the forecast of 48.4. So this is not very good. It just tells us that the manufacturing sector is contracting, even if the pound has been declining. So the general idea is that you have your currency declining, and then suddenly you can, buy more goods of the country of the currency which is declining. But we're not really seeing too much of a benefit here, and I think as well because of stockpiling ahead of the old Brexit date, it sort of distorts the data a bit. But this is not a coincidence, as we already know. The numbers overall, U.S. are bad, Germany is contracting, and also the UK is contracting in regards to GDP numbers. So the last reading for the second quarter was showing contraction, and by the looks of it, it will be another month or another quarter of contraction again. So we'll have what we call a technical recession. And again, we've seen it across the world, but obviously in particular in the UK, is linked to Brexit. So that is influencing the pound in a negative way. And you can see how the price is now more and more clearly bearish. You had a nice strong decline here, and technically this trend is going to be bearish below the 122.34 level. Actually, let's leave it up here. You have 1, 2, 3 levels like that, and it looks now we have resumed the downtrend. It doesn't have to be like that, but obviously the economic data is pushing it lower, and I suspect that if the market would maybe go up here to something like 121.56, then that could potentially sort of trigger further sell-offs. So why that point then? Well, because it took a fib from the high to the low, and that's the first fib. It doesn't have to go all the way down up there, but I think if it does, people are going to try to sell. So this is clearly bearish now, and that will be again my trend funding level. But you need to bear in mind, because of Brexit coming up and because of potential sort of delays to Brexit, if say the PMs of the UK manage to sort of delay it, so we don't get out at 31st of October, so that gives an opportunity to get for some a different deal, that could easily cause the pound to trade upwards. But the way it looks right now, the UK Parliament will be suspended, and there was not going to be enough time to delay Brexit. Let's see what happens. I think in general, maybe even the EU might change their view, even though comments coming out from the EU over the weekend are not looking very encouraging. But let's see what happens. Unfortunately, when it comes down to politics, anything can happen. Everybody plays tough until last minute, and then they cave in, and then you have some sort of a deal. I would hope and assume. This is the Euro versus the USD. So we got a sharp drop here on 31st or 30th of August. The market moved down lower, and over the last few days, I mean, we said a few weeks ago, look to sell here around this area. That went fine, and then we moved upwards. But when we're trading at the median line, I don't want to be selling because it's a neutral space. In a downtrend, I want to sell at this level here or this level here. And right now we're at the lower levels. So, people that have been selling up here are probably going to start to book profits. I think that we could probably go a little bit lower. I think 109, I think that will be a good level for the market to sort of try to challenge. And then according to the system itself, the actual, extreme level is down at 107, 108 really actually. And I think eventually we'll trade lower. We got some really interesting comments. This is from Lagarde, which is going to become the next head of the Bank of European Central Bank, and she talks about interest rates and that in negative interest rates have helped Europe. So on one hand, she says, yes, negative interest rates make it really difficult for banks to sort of survive. On the other hand, and also for consumers, because they need to pay, they get punished for having their money with the bank. However, she says that because most people have a mortgage, most people work somewhere, they will benefit because of lower interest rates. So the negative interest rates, sort of, as you already probably seen, it boosted house prices in places like Spain and things like that. But if you want to be, say, have a mortgage and buy, then it's relatively cheap. If you want to set up a business, you need to borrow money. That's also relatively cheap. So she's saying all those positive effects um, help help the consumer more than it hurts them. So it's a very strong, not strong comment, but it tells us we'll see more than what we see more of what we've seen in the past in form of the ECB, and that by itself is bearish. And I think overall the U.S. is one of those few places where interest rates are still positive, and I think that sort of supports the dollar, and should cause the euro to go slightly lower. So if you want to short this one today, then well, I think as a minimum you need to wait for pullback to the median line, which is at 110. 60 average now, maybe 111, and maybe stops above here. But my preference would be, selling maybe up here, but maybe for now, because we're below it, probably gonna go up and then get rejected to the downside. But my preference again is sort of allowing it to go all the way up and then short here. It's not the time to get very, very excited. Maybe things have changed, so maybe we'll start trending at one point. But we had these starts before. Like if I show you the dollar index, see if I can find it now. It's at very high levels. So you can see here's at very, very high levels. We're overall in this bullish uptrend. But we had these sort of false starts many times before. We have the break here. That didn't play out. We got the break here, didn't work out. We got the break here. Like all of these bullish breakouts have not really played out very good. Instead, you can put on something like, again, a pitchfork, and then the pitchfork for this one is not the best, by the way. And then you see that it sort of explains the price action. You got rejected here, here, and here, and here, and here. So you got actually 1, 2, 3, 4, 5, 6, 7 touch points, and then you got 8, 9, 10, 11, 12, 13, 14 touch points. These ones are sort of measure the most extreme price action. So it does tell us that maybe we'll go up with another 78 points or almost a full percent. But then it really should be limited. Doesn't mean that it will be limited though. It's very easy to load something like dollar and region kroner, and here the situation you have you had a nice rectangle breakout here not so long time ago, and this sort of suggests that we can go up about 5%. So you still have more to go here. And if I put something like the Andrews pitchfork here, I'm sure it has more to offer. It has a bit more to offer. You can see we can still go slightly upwards here. This Andrews pitchfork is again just a bunch of trend lines and sort of explains that this is sort of the median trend. So what I'm trying to tell you here, maybe don't get too excited with the dollars. That's what I'm saying. And then maybe, again, right now the Euro USD is probably going to trade a bit lower, but then maybe look to stabilize. And again, I wouldn't be buying down here. It's mostly about actually selling on corrections. Now, if the PMI is all coming down, why isn't the dollar yen going much lower? That's a good question. Why are stock markets even at these levels? That's what I would say. Stock markets are very strong. German DAX, you can see here, trigger inverse head and shoulders. Doesn't make too much sense to me with the world contracting, and I think it's not going to improve anytime soon. So if I can, I will just try to be bearish. And this is one. So this is the dollar versus the Japanese yen, and the situation is not too very similar to it was a few weeks ago when we said look to sell here. So I'm going to continue to be bearish, but this is obviously supported because of the dollar in general doing relatively good against many different currencies. So that's sort of influencing this and supporting this. As for Brent crude, the idea has been to sell here at 60.43. Actually, it's a bit higher, and I've been lowering it. There's no change to the outlook here. I think if we trade below something like 58.32, then that's gonna initiate further weakness. And there's no change here. I think people are gonna sell up here. As for gold prices, the trend remains bullish for now, and I think people will try to buy at 15.14 here if they can. The trend is bullish. I think we can probably reduce the trend funding level a tiny bit, something like 14.86. Now, if you look at this from a weekly chart, we add a few interesting levels. If I just hide everything, this is last week's candle. That little candle is a bit of a reversal candle, profit-taking candle. I'm not saying we're gonna have profit-taking, but I mean we have had profit-taking here. This is what this is telling us. But in the longer run, I still remain bullish. So you have this massive inverse head and shoulders price target at 1,700, which is something I'm focusing on, and then you have this ascending wedge. The target of that is 1,600, and all these levels we talked about when we're down here. So it's not something we made up. In fact, these head and shoulders levels is something we talked about already in 2018. But in the short term, again, we sort of reached a flat pattern target here. That target was derived from taking the level here, up here, that difference here, and adding it from here to here. So we reached that, and we reached a few other stuff as well, levels already. But again, we'll continue to be bullish, and again, maybe from low levels at 15, 14. As for the German DAX, unfortunately this trend turned bullish, and it actually triggered an inverse head and shoulders. So the idea was to be bearish below the August 8 high. Now the price is above that level, so the trend is bullish. And I think if we go down, I think people will look to buy. I'm not very encouraged with this, given the numbers the way they look like. But yeah, if we go down, I think people might buy. And the trend is going to be bullish above 11,564. As for the S&P 500, so a few days ago, we still looked to buy down here if you wanted to, and the market did go upwards. And we did try to trade above that level, but it proved to be a false move so far. If I show you the daily chart, you can see this candle here, that's a bearish candle. On the other hand, the candle that is building right now is bullish as well. So you get a bit of conflicting signals there from candles. As for the levels, it's actually not that confusing. The price is pretty much at these highs and these levels where people will probably try to offload long positions, and they will try to buy them back. Now, as you can see here, I lifted up that little buy zone now because it looks like volatility will be contained despite sort of all the negative headlines. So if we do go down to 2,855.9, I think people will try to buy again. You just need to make a decision, and in my case, I'm not very encouraged with the macroeconomic data out, so I'm not actually looking to buy there. But the trend is bullish above this level, so there's no real reason to make any major changes. I think that's pretty much it. I think the only thing we did not cover is US oil. So US oil, actually, let's do this. So US oil is sort of trapped within this range. There's absolutely nothing happening here. But I'll tell you, it's going to be a real big party here whenever we break out. So don't despair too much if you're trading crude oil. I know it's really boring. Euro dollar is obviously starting to move a little bit now. Hopefully that can start to, cause changes in positioning. S&P 500 is still within the range, but all of this is actually good because what happens is that when things tighten up, we can have all this energy is contained. So we will have a massive breakout at one point. I'm not sure the best interpretation is to treat this as like some sort of a massive triangle, because then if I do that, I will need to do something like this. I'm not sure that's the best. It's sort of 40% move, $19 move. I don't think that's gonna necessarily happen in one go, but I think maybe sort of at least this little section, so 20% up or 20% down, so that $10 move, that would not be unsurprising. But that's not the cool thing. I mean, that is a very good thing. What's really good is that stop losses orders, so you can get them very, very tight. So that's the benefit of this. It might be boring now, but as things move closer, you got more energy that needs to sort of propagate through price, and you can get some very, very tight stop loss orders. So that's why it's more important now to pay attention to this than it was just a few months ago when I said that things was gonna consolidate further. But we are now in a situation where I think very soon we can have some sort of a bullish breakout or bearish breakdown. Given the way the macroeconomic outlook is looking, I would see a bearish breakout, but the chart is obviously telling us something a bit different. Okay, this is gonna be this gives you a very nice overview of what's gonna potentially happen this week. What's gonna happen next is that I will actually take some time off. So I'm gonna be back on, I think should be September 10th, September 11th or so with the next update. I might, however, bring, I will probably bring my computer to holiday. I get easily bored hanging out at the pool. I think at the second or third day it's like feels almost a bit like time wasting. So what I will probably try to do is maybe provide you guys with an update, another recording maybe by Thursday to see what's up with the markets and sort of share my input. In the meantime, I'm sure you're gonna do well, and you might see me online on something like Twitter or so. So don't forget to subscribe to that. You can follow me on AlexFX00. As well, don't forget to like the comments or videos down here. You can always just press like on this video that you're watching right now. Of course, it's not uploaded yet, so that's why you can't actually see it. Okay, guys, thanks so much for watching, and I'll see you guys probably on Thursday, if not next week. Thanks so much, and see you guys soon. Thank you, and bye-bye.